Welcome to the investment markets overview for the week ending the 5th of August 2022. Last week it was the Fed who hiked their base interest rate by 0.75%. This week it was the Bank of England and the Oz Central Bank who increased by a respective 0.5%. They have all been behind the curve regarding market interest rates and their expectations for consumer price inflation. With all central banks forecasting higher inflation to come, 13.5% annualized by October according to the Bank of England, it's worth a glance at the Commodity Research Bureau Index. It's a basket of commodities weighted as shown within the chart between energy, food and metals, the consensus cause of higher inflation. Most of the bankers were sat on their hands as the CRB was rising by over 60% annualized in March of this year. See the annualized rate of change within the lower box of the chart, only to panic during its recent descent to the current 27% annualized. Furthermore, note that the CRB price has fallen below its 100 moving average, a bearish sign. Unless price can regain it, inflation is likely to slow further over the rest of this year, and guess what? The CRB may even signal deflation. The overview includes the performance statistics for the main stock indices. This week they were mixed, as were sovereign bond yields. And the commodities covered, noting a near 10% slump for the price of oil. With a mixed week also for cryptoland, bookended by Binance's 7% rise and a 6% fall for Bitcoin Cash. Meanwhile, the regional coverage includes observations on the US consumer credit spike, plus the implications from recent UK house price data. Whilst out east, China's new home sales are already deflating. A socionomist observes the tendency to herd when it comes to financial decision-making by human beings, and it is no different when it comes to central bankers. At least 70 of them have raised their interest rate by 0.5% or more this year. As CPI projections become ever more bold, commodity prices are stalling, market interest rates have been rising for over 2 years and are now impacting the desire for credit, unless it's out of desperation. You do not have to follow the herd though, just follow the facts, not the fiction from the mainstream. A final performance table for the major stock indices since the year 2000 concludes the investment markets overview. A 1-month trial of this 40 times per year publication is available for less than $15, a whopping 70% discount. It's an ideal opportunity to grab the bargain for 4 publications. We strive to turn the technical into plain speaking observations, backed up by factual charts and context. Join us for a guide through the maze of economic and market data via the weekly 5-page overview. Just follow the links provided, and if you're watching this on YouTube then kindly give it a like as it helps our channel.